Hello, my friends. Today is August 9th, and this is Markets Weekly. So, this past week, we saw the major equity indexes basically completely recoup their losses from last Friday, with the NASDAQ even making a new all time high. However, overall, I thought the markets were, it was another boring, slow summer week. But we did have interesting developments in trade and in politics. So, today, let's talk about three things. First off, let's talk about the big winners and losers in trade the past week, and also some foreshadowing of Trump's upcoming chips policy, which could be unveiled as soon as next week. Secondly, some new developments on the race to be the new Fed chair. It seems like Governor Waller is emerging as a favorite, but new names are being floated as well. And lastly, let's have a little bit of an update on the non-farm payroll sprint we talked about last week, where a former BLS commissioner, a Trump appointee, discusses why there are such big and frequent revisions. Okay, starting with trade. Now, the big winner in trade policy the past week is obviously Apple. If you look at this chart of Apple stock price, you'll see why. The past week, Apple stock was basically up over 10%, one of its largely weekly gains in many years. Now, Apple was a huge stock, so obviously when it goes up by over 10%, it's going to drag the major indexes up as well. So if you're happy with the major indexes, a lot of it has to do with Apple. Now, Apple stock hasn't actually been doing that well the past few months, and it's easy to see why. AI has been all the rage, but Apple just doesn't seem to be very good at AI. In fact, it doesn't seem to have had a revolutionary product in some time. To be clear, iPhones sell very well. Everyone still loves their iPhones, but it's not really a growth market. And some people think that the good sales they've had the past quarter could in part be due to people buying iPhones in fear of tariffs. So why did Apple stock jump so much the past week? Well, all credit goes to Tim Cook. Now, Apple CEO Tim Cook visited the White House and paid his respects to the president. The president had a press conference with him, and Tim Cook basically promised to invest $1 gazillion in making iPhones in the US somehow, someday. And also, of course, gave the president a very nice gift, one of its kind, a glass and gold sculpture that could be placed on the Resolute desk. And of course, we all know the president really likes gold. And so these two things seem to have pleased the market gods and sent Apple stock up a lot. But of course, you could also say that spending a lot of money to build factories in America, where you will have to produce at higher costs, is good for jobs in America, good for the American economy, but might not be the best for your profit margins, but maybe that's something for another day. Now, the big loser of the week has to be Switzerland. Now, Switzerland, unlike many of the other developed countries, has actually been slapped with a very sizable tariff. Trump put 39% tariffs on imports from Switzerland. And that's kind of a big problem for Switzerland because they are a country that is heavily dependent on trade, selling a lot of things like chocolates and gold watches and cheeses and so forth. Now, by all accounts, the Swiss president is a technocrat, very competent person, also very serious, basically very Swiss. And it seems like that is making it difficult for her to negotiate with the Trump administration. Now, Switzerland is already, because they're a very open economy, doesn't actually have that much protection. So if you're asking Switzerland to lower their tariffs, well, they'll say that we don't really have that many tariffs. One exception, of course, is agriculture, which all countries try to protect. It's a political issue, it's a national security issue, but they didn't seem to be willing to budge as well. So the Swiss president actually flew into Washington the past week trying to maybe meet with the president, maybe get some reprieve on their very high tariffs, but actually had to fly back empty-handed. She, kind of a big defeat for her and for Switzerland. Now, I think the obvious answer for them, of course, is to have to buy it down, as Trump has mentioned before. So eventually, again, they're going to realize what they're doing wrong, and they're going to have to turn around and pledge to invest a lot in the United States, whether it be to build a chocolate factory or a watch manufacturing factory or something like that. I'm not too sure. And the secret is, I think, you don't actually necessarily have to go through with it. But I'm sure they'll figure it out eventually. Now, the third thing that was interesting the past week is the president hinted at his new upcoming chips tariff policy. Now, as we know, we have these huge reciprocal tariffs on countries throughout the world. But we also have these sector-specific tariffs that are aimed for more strategic purposes. For example, there are 50% tariffs on steel and aluminum because the president wants the United States to be self-sufficient in steel and aluminum. That is something you need if you ever want to, say, fight a war. Other things of national security importance are chips. Again, if you don't have chips, you really can't do anything when it comes to modern technology. And pharmaceuticals, again, medicine is something of crucial importance. The president has hinted that he's going to start with a small tariff on pharmaceuticals and make it up to a ridiculous number, say 100%, in the coming months, encouraging companies to build pharmaceuticals in the US. When it comes to chips, though, it looks like the tariff policy is going to be a lot more toothless. Now, let's listen to how Secretary of Commerce describes this.
If you build in America, you're not going to pay a tariff. And what he did is he said, I'll give you the leeway if you're committed to building in America, and only if you're committed to building in America. Then he'll hold off on your tariff. But if you're not building in America, 100% tariff.
Yeah.
Pay or perform in America.
So basically, if you are a chip company and you promise to build in America, you won't have to have any tariffs. But if you don't do that, you'll be subject to tariffs, say 100%, basically cutting off trade, making your business not viable in the United States. Now, when you think about it, so all the tariffs, all the chips that people really think about, say the fancy AI stuff that are imported from Taiwan, designed by NVIDIA, or the really fancy CPUs, again, manufactured in Taiwan, designed by AMD, that stuff is going to be basically exempt because all these big companies, TSMC, Intel, they have, or in the process of building more and more companies, more and more foundries in the United States, so they're not going to suffer. And to be clear, a lot of the super high-end stuff, like the NVIDIA chips, they wouldn't really be impacted by tariffs because there are not really many substitutes. So if you put a tariff on them, all that would really happen is that NVIDIA would just pass it on to their end buyers, and the Mag 7 companies, hyperscalers, would end up just paying more, and they probably don't care since they have so much money. So it's hard to see what this policy really impacts. Maybe it just impacts chips from, say, Huawei or others that are made in China. So it could be some form of decoupling, but otherwise, it doesn't seem to, at least the way that it's teased, to have a big impact. But we'll have more details of this later on. If Secretary Lucknett wants to raise revenue on these sector-specific tariffs, they're going to have more teeth, and maybe that will happen. So we'll see. Okay, now the second thing that I want to talk about is new developments in the race to be Fed chair. Now, as we all know, there were these top candidates, the two Kevins, Kevin Hassett, the president's trusted economic advisor for many years and currently holds the post of the chair of the National Economic Council, and of course, the other Kevin Warsh, who well-connected person who has a long history of being very bad at monetary policy. But these guys, among the two, my personal view was that Kevin Hassett will get it simply because he is a Trump loyalist. But it seems like that's changing. Now, there's a report from Bloomberg the past week where Governor Waller, a current governor on a Trump appointee who has voted for, dissented the past meeting for rate cuts, is the front runner. Now, Governor Waller made his pitch to the public on a Bloomberg interview not too long ago, noting that if you appoint someone who is a loyalist, the markets, they might freak out. You might have a big sell-off in the bond market and end up with higher rates. So if you appoint someone, though, that is trusted by the market, like me, you're not going to have to worry about that. And after all, I can convince other people on the board, and I think we should be cutting rates, and I have a good reason to believe that. And so he seems to be getting the okay with a lot of people in Trump world. I'm guessing that's Besant, but of course he has yet to meet the president, and everything comes down to what the president thinks about you. And so it's probably going to be the most important interview of his entire career, where if he does well, he can probably be Fed chair. I can't imagine how nerve-wracking that will be, but obviously, as I've said many times, I think he would be a good pick. However, we also had some last-minute drama where on Friday we had a couple other names leaked out. James Bullard, former president of the St. Louis Fed, was floated, and also Mark Summerlin, a former Bush-era person. I believe he was deputy something or another in Treasury. So these guys, again, interesting because they're not really part of Team MAGA, but again, just from objectively speaking, nothing wrong with these picks. These seem like good guys, but do you have the public record of saying that you will vote for rate cuts? Do you have rapport with the president? It doesn't seem to me like these are really strong contenders. It's probably some apprentice-style drama, as the president likes. My best guess is that, this is probably going to be Waller at the moment. Since that's a strong pick for strategic reasons as well. But it's always hard to know. Now, the reason it's a good pick for strategic reasons is that Jay Powell actually has a bit of a trump card on his hand. So Jay Powell actually doesn't have to leave the Fed once his Fed chair term is up. He can stay until his term expires, I believe, in 2028. So historically speaking, when the Fed chair ends his term, he resigns from the Board of Governors, and the president gets a chance to appoint someone else to be on the board. But he doesn't have to do that. In the past, we had Governor Echols, after ceasing to become Fed chair, stay on the board. Now, if Jay Powell were to just kind of, stay on the board past his chairmanship date next May, he could really be kind of a thorn in the president's side, because in effect, Jay Powell would be kind of like a shadow Fed chair. Now, Jay Powell, because of his stature as former Fed chair, remains influential with the public and with other members on the committee. He's someone that people on the committee know and trust, having worked with him for many years. And so Jay Powell could, through that influence, continue to sway policy. That is a very bad scenario for the Trump administration. So one way to make Jay Powell at ease so that he won't just kind of, stay there and try to do what he perceives to be the right thing, that is protect the independence of the Fed, would be to appoint someone that Jay Powell has confidence in so that Jay Powell can be at ease and leave the board. So if Governor Waller were appointed as Fed chair, I think it's pretty certain that Jay Powell would feel at ease, he would leave, and that would strategically give the Trump administration a chance to appoint another person to the FOMC next May. So that would give him an extra seat. And so, again, increase the MAGA influence over the Fed. Another interesting development the past week was that the president nominated Chair of Council of Economic Advisors, Steve Moran, to fill the vacating governor's seat of Governor Kugler. Now, Governor Kugler suddenly resigned from the board last week, but her term was always going to be up in a few months anyway. Now, the expectation was that when her term was up next January, the president would appoint someone to fill that 14-year vacancy. That timeline has been pulled forward. Now, the thinking was that maybe the president could nominate someone in October, November, and then fill that seat in January. But since Governor Kugler suddenly resigned, there's going to be a 4-month vacancy. And it seems like for these 4 months, Chairman Moran is going to fill that spot. Now, Steve is someone who is very close to the president, very much on Team MAGA, and has advocated for rate cuts. So this is going to be an extra voice on the FOMC for the next few meetings to kind of advocate for more rate cuts. Now, to be clear, though, the market already expects the Fed to cut rates, probably 25 basis points in September, probably another cut by December. Now, what could happen is that Steve could advocate for 50 instead of 25 basis points, or he could also push for more changes in the governance and culture of the Fed. For example, one of the concerns that Steve has had in the past is that the Fed is engaging in mission creep. It's talking about things like climate change and DEI and stuff like that. And it's very clear, the statistics show that Fed papers have actually increasingly focused on things like that. So he could also make his mark on the Fed by trying to rein that in, focus the Fed more on its mission. So it's also possible, of course, that the president, seeing that Steve does a good job the next 4 months, could actually appoint him to the full term in January. But at the moment, though, the president seems to be keeping his options open, saying that Steve will fill this for 4 months, and then he was going to appoint someone else on the board in January. And at the moment, it's really not clear who. I'm sure that will be a topic of a lot of drama and a lot of news articles in the coming months. Okay, the last thing that I want to talk about is to give a little bit of an update on the job revisions we saw in the BLS the past week. Now, a lot of people have been talking about that the job revisions were the largest we've seen in a long time, and that suggests that there may be something wrong with how the BLS is performing. And of course, President Trump did fire the head of the BLS on those grounds, and maybe he also didn't like the data either. Now, interestingly, he actually has some support in market participants about firing the BLS commissioner, where even Ray Dalio weighed in and said that he also would have fired the BLS commissioner simply because these big revisions suggest that there's something wrong with how the BLS is doing its work. Now, I was wondering why there was these big revisions, and so very, very, very thankfully, Odd Lots had a former BLS commissioner, a Trump appointee, go on their show and discuss why there are big revisions. Here's what he said.
Well, those businesses are supposed to turn their surveys in at the end of the month, basically, but only about 68%, usually that's the average, do so. And so BLS keeps the window open for 2 more months. So 68% or so at the end of the first month, they make the first estimate. Then at the end of the second month, we get about 83% completion. And they revise that number of the first month. And then by the third month, we're into the 90s, usually end up around 93, 94% of all the.
So basically, the BLS sends out surveys, and maybe 60, 70% of the people respond in time. And so those surveys then get, again, it's a sample. So through their statistical algorithms, they come up with a NFP number. But over time, more surveys come in, and that number gets revised. And so the data suggests that the survey response rate within the first months has been dropping a lot. So that first number, that first NFP number we get, is basically becoming less and less, built on less and less surveys, so potentially less accurate. However, you can see that subsequently people do tend to return their surveys on, so the final number still is basically comprised of comparable number of surveys as in the past, so it's probably as reliable. Now, one other thing that's often noted is that these big revisions usually happen in turning points in the economy. So if we're getting these big revisions now, there is an increased chance that we may be in a turning point where we may be slowly falling into recession. And I think that's what I'm going to write about today, where there's really a lot of data that suggests the labor market is cooling rapidly, and we're probably heading into, if not big softening, a recession. All right, so that's all I prepared for today. Thanks so much for tuning in. I'll talk to you guys next week.